Hi everyone, I'm Shweky, your Swipe Left for Success host and CEO of Delarosa Lending Group. We are a hard money lender as well as investors in multifamily, fix and flips, and commercial real estate development. There still seems to be a lot of confusion about the loan forbearance options available under the CARES Act. In this video, we're going to walk you through all of the red tape step by step and help protect you from losing your biggest asset, your home. I want to be clear that you should not be exercising the forbearance option if you can still make your monthly mortgage payment. It's really an option of last resort for those homeowners who are unable to make the monthly payment as a result of the negative financial impact of the coronavirus. In October, over 1 million homeowners who were delinquent on their mortgage had not requested mortgage forbearance, leaving them vulnerable to future foreclosure and eviction proceedings. While the option should only be used if absolutely necessary, ignoring altogether if you really need it can have a devastating impact on your financial well-being, and we want to avoid that. So, what is forbearance and how does it work? Forbearance gives you the option to pause or reduce paying your mortgage for a limited period of time. It does not erase what you owe. You will eventually be required to make up for missed or reduced payments in the future. Over 70% of the outstanding residential mortgages right now are backed by the federal government. Federally backed loans include FHA, VA, USDA, Fannie Mae, and Freddie Mac loans. Provisions within the CARES Act authorizes homeowners experiencing financial difficulty due to the impact of COVID-19 to temporarily suspend monthly payments. So if you have a federally backed mortgage and are currently unable to make the full required monthly payment, you should contact your loan servicer to request a 6-month mortgage forbearance. Many people, including myself, thought the extension request was good for 12 months. That's not the case. You'll have to make a formal request for an additional 6-month extension before the expiration of the first 6-month extension period. You'll need to explain in writing that you have a pandemic-related financial hardship. No other documentation is required. It's critical that you ask your servicer how you'll be required to pay back the amounts owed after the forbearance period expires. Once you're able to secure the forbearance option, ask your servicer to provide written documentation that confirms the details of your forbearance agreement during the forbearance period. During the forbearance period, there won't be any additional fees, penalties, or interest added to your account, but your regular interest will accrue. Your property taxes and homeowner's insurance should continue to be paid by your servicer if your mortgage has an escrow account. You should confirm this with your servicer. If your mortgage does not have an escrow account, you will be responsible for paying property taxes and insurance payments, as well as any HOA and condo fees during the forbearance period. Those fees and expenses do not fall within the forbearance provisions of the CARES Act. If you're continuing to receive some income that turns out to be more than you need for your everyday bills and expenses, consider putting the extra money away so that you can use it to pay off what's needed later. Contrary to rumors, when the CARES Act was first passed, none of the federally guaranteed loans require a lump sum payment at the end of the forbearance period. The following are 3 general options that are available with most of the federally backed loans. The first option entails a repayment plan which allows you to repay past due amounts over a period of time. Under the second option, if you can only afford to resume your original regular monthly mortgage payment, you may be eligible for a payment deferral, which puts your missed mortgage payments into a balloon payment due at the sale or refinancing of your home or at the end of the loan. If you don't think you'll be able to resume your mortgage payments at the end of the forbearance period, contact your mortgage servicer right away before the end of the forbearance period. Under the third option, you may be eligible for a loan modification which changes the terms of the loan to enable a more affordable payment to accommodate a longer-term financial shortfall. Non-federally backed mortgages don't fall within the purview of the CARES Act. However, many loan servicers of non-federally backed mortgages are offering similar deferment programs to that being offered under the government-backed mortgages. If you have a non-federally backed mortgage, contact your loan servicer and have them provide you with the available forbearance options in writing. Many borrowers are concerned about what the forbearance option will do to their credit score, and it's a legitimate concern. The quick answer is that it will not negatively impact your credit score. If you were otherwise current on your account and have received relief as defined by the CARES Act, your servicer or creditor is required to report your account as current. If you stop making mortgage payments without a forbearance agreement, the servicer will report this information to the credit bureaus, and it can have a lasting negative impact on your credit history. A number of our borrowers who otherwise had good credit ran into this problem, and as a result had to resort to hard money lenders rather than conventional financing. Had they simply contacted their servicer and opted into the forbearance program, they could have avoided the higher borrowing costs and unnecessary damage to their credit. You can check your credit report for free through April of 2021. I recommend that you check it monthly, as inaccurate reporting happens all the time. You should dispute any errors in your report immediately. Hit the link button below to access a great website at consumerfinance.gov that explains the forbearance option in greater detail. It's not your fault for feeling overwhelmed, confused, or even angry at how the pandemic is affecting your financial security. Hopefully you found the information helpful and have a better handle on the steps needed to exercise the forbearance option. All of us will get through this difficult period better, stronger, and hopefully more prepared in dealing with future unknowns. Thanks for tuning in. Subscribe and stay tuned to our YouTube channel at Swipe Left for Success for upcoming episodes offering real estate investors and entrepreneurs practical advice and ideas to help you grow your business and achieve the success you envision. If you really like the show, please share it with your friends. Let us know about any topics you'd like us to explore in the comments section below. We are listening, and we'll see you at the top.